In this video, we're going to be looking at candle reading or candlestick reading. If you want to trade in any sort of market, this is going to be probably the most important video if you're using price action that you're going to watch, and also one of the best things that you can master. Hey there, welcome back. Alex Paim here, and first off, if you haven't yet subscribed to my channel, make sure to subscribe. Also make sure to turn on the notification bell, so every time I upload a video you're notified and you can catch the new videos that I upload to my channel. Okay, now this is part of a series of videos that we're looking at in price action, and if you haven't watched the other videos, make sure to go back and watch them. And at the end of this video, I'm going to give you a bonus. Okay, so it's going to be a link so you can download a full-blown book for you to master the topic of candlestick reading, okay, because it's that important. If you master this, I mean, I guarantee that you will be making money if you become an expert with candlestick reading. Okay, so let's go ahead and get started. So first off, we need to understand the anatomy of a candlestick. Let me pull up my tool right here, and the first thing you need to know is, in this example, we've got green as for bullish candle, meaning going up, and bearish, going down, is the red candle. Some people like to change the color. You'll see white and black, blue, or different colors. You can change that. It's not a problem at all. I like to use green and red because that identifies that the price is going up, bullish, right? So is the bull, and bearish, red, going down. Okay. Now you have the body. Okay, the body would be this main bulk of the candle. That's called the body of the candle. Now these little lines at the very top and bottom, they are called the wicks. Okay, the wick of the candle. Body, high. So like right here, I'm going to show you first off, to give you an example, there's an arrow pointing up, right? So this candle, it opened right here, went all the way up to the highest point. So you see high, so highest point because it's the wick, and it closed right there. That's the closing of the candle. In reality, the whole movement was like this. It opened here, went down because it came back to the opening price, then he left a wick, and he went all the way up. He came back and closed right here. All right, and the bearish, it opened at the top, went up, left the wick, went all the way down, and it closed right there. All right, so you have the body, you have the wicks, you have your high and low points, and now you know what a bullish candle and bearish candle are. All right, let me go ahead and show it to you on the chart, something that's very interesting, very unique. Okay, let me get rid of the chart. All right, so first things first, what you're seeing here is this, the movement of the candle. I want you to get what the movement of the candle is and why it forms the bullish and bearish candle. Okay, so when it opens, for instance, right here, and if it goes down, okay, and let's say went all the way up, came back here, and it closed right there. Now this is a bullish candle. Why? If I traced, okay, from the start, went down, right, and all the way up, and it came back here, it closed here, it leaves me with a green color. Now why is it would be like this shape right here? Why does it leave this shape? It's simple. Okay, so if I have green candle and green candle, okay, now notice that we are not talking about time frames. We're not talking about 1 minute, an hour, because it really doesn't matter. because what each candle is going to identify or is going to represent the time frame that you're in at the moment. But I want you to get this, okay? So let's say we've got green at the end. Let's say we are in the 1 minute time frame. This one right here. Oops. We are in the 1 minute time frame, right? So each candle has 1 minute. So 1 minute, and it ended the 1 minute, and it started a new minute, and it went all the way up, okay? And it ended the other minute. Now, if, let's say, the first movement of the candle went down, okay, this would have been a red candle because it started here from this point and it went down. So it formed a red candle. But let's say it went down for 20 seconds and then it went up all the way here, right? So it's the highest point, and it came down and it closed right there, okay? It would have left the wick because this was the lowest point at the bottom, and the highest point at the top was this right here. That's why you end up with a wick at the top and a wick at the bottom. Now remember that we mentioned that the red candle, it starts at the top. So let's do a quick example here. So let's say we started, so it ended here, it closed right here, and the price shot up, right? And it hit the highest point of the wick, came back. Now we are back to square zero, right? Square one. And then went down and it closed right here. You end up with this sort of candle, okay? Why? Because it opened right here, went up. If it would have just ended up like right at this point, it would have ended up a green candle. But as it came down past the opening price and it was shot all the way down, it turned red because, again, it opened right here and it closed right here, and this is the highest point. Now again, let me erase this real quick because this is very, very important for you to understand, okay, how these candles are formed, because then we're going to switch to the line chart. Let's say now that the candle ended here, shot up, right, and went all the way here, and it came back down. Now you end up with this sort of candle. And then from here, it opened here, all the way down. And let's say passed a little bit and retracted. You end up with this candle. Now the next one, if it opens here, because always after the red one, it always opens at the bottom. The green always opens at the top. So let's say it opened right here and you shot up and you came down. Now you end up with this sort of candle, okay? Notice that we have not talked about the names of the candles, and that was purposely done because otherwise, this video is going to be a huge video, and I don't want it to be that way. Now, below in the comments of this video, I'm going to leave you with a link to this booklet, okay? It's called the Candlestick Trading Bible, and it's a very, very good book that talks about the different types of candles and price structure and things that we have covered on the channel that it's very vital for you to understand. So I highly recommend for you to click, download, read it a couple times, study it, and implement on your daily trading, okay? So let me turn on the chart right here, and I'm gonna reset, and I'm gonna show you how this works and give you kind of some examples. So I switched to the daily so you can see some examples, okay? That you have, one second here, let me switch the color. So for instance, in this case, this candle, the green candle, closed right here at the top. Then it went up, left a high wick, came all the way down, left a small little wick, and it closed right here. Now there is a difference between the opening right here and the body of this candle, and sometimes this happens depending on the volatility, okay, and spread and the different types of brokers that you're using. But in this case, let's say it went all the way down and then it shot up and it came back and retracted and it closed right there. Okay, boom, came back all the way down, up, closed right there. It started here, went up, down, and it closed right there, left the body like that. All right, so now you know how it's formed. If I switch that to lines, because in essence, when big corporations or institutions, big money are trading, they're looking at the prices, okay? And they're looking at the chart. They are not necessarily looking so much as for the candle patterns, but they're looking to see where there has been a lot of liquidity, meaning there's money that was stored or people ready to buy at the bottom, ready to sell at the top, and then they obviously with big money can manipulate the market and place their positions at a certain time. Now, you know, some people tend to give a lot of credit to market manipulation, but a lot of times it can be just as simple as an institution wanting to invest the money, or you know, and they just place the order, and then the price shoots up and forming a particular type of candle. Okay, I just want you to know that it's not all manipulation, but it is. You have quite a bit of manipulation in the market because that's how people make money. Money moves from the impatient to the patient. But I want you to understand the basics of the candles. Okay, so this video is so you understand how the candles are formed, what to expect in terms of the colors, and when it closes at the top, when it closes at the bottom, what it forms. And we're going to be discussing strategies in a different video where we're going to be basically combining support and resistance, trend lines, candle reading, and volume, which is very important for you to have a strategy that you can put in place to effectively trade these markets. Okay, so go ahead and download this book. Again, it's very important that one, you download this book, read it, and also join our Telegram group. Ask any questions that you may have, because we are going to be covering several of these topics. We're going to be looking at different types of candles, and also we want to make sure that you succeed. So thank you so much for watching this video, and I'll catch you later. Take care.